Hello, everyone, and welcome to today's NinjaTrader ecosystem event, 6 Fibonacci types that'll create the most precise price targets and reversal zones. My name is Patrick Hodges. I'm the NinjaTrader ecosystem vendor relations manager. Before we get started here today, I have a few housekeeping notes. Secondly, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage using the phone number or the email on screen. Before I turn the mic over to Tom, it's important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation nor a recommendation, but simply educational in nature. All right. Well, once again, thank you all for joining us here today. And without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, Tom Winterstein.
Thank you, Patrick. Appreciate that. Warm and gracious welcome. And for everyone that's joining us live or watching this recording, big welcome to you. I've scrolled through some of the participant names and see some familiar names, so welcome back. But mostly I see a lot of new names out there, and that's very exciting because the topic that we're going to cover today is something it's widely known as far as Fibonacci, but it's one of those things that's not very deeply known. A lot of people know how to use some of the basics of Fibonacci as far as swing fibs go, but we're going to cover 6 different Fibonacci types today that create the most precise price targets and reversal zones. And we've got, some basics, understanding and essential information we're going to cover. We'll take a look at some examples, and we'll finish up with some charts and some Q&A at the end. I always like to start with my story, so to speak. So you kind of put a name with a face or a voice. And really my story is very similar to most of your stories from a trading perspective. Is when I started, I didn't know anything, but everybody got started somewhere. I put a picture of my family here because that's what really grounds me. From a personal and professional standpoint. Been married to my wife for over 33 years now. We're the proud parents of all sons. I do have an MBA degree in finance. My undergraduate degree was more computer science related, combination of business administration and computer science, but it was really heavily oriented towards statistics. And so I've always been kind of a numbers guy, so to speak. And yes, I am the ChartPros founder, but I'm also a serial entrepreneur. At the start of my first business when I was 10, when I had a newspaper route, and I figured out that the harder I worked, the more money I could make. And I really like that scenario, and have really done that. Has served me well as a profession throughout the years. Over the last 20 years, I've run a software company that delivers online training for professional work development for adult learners. So ChartPros is really within that umbrella of developing and delivering online training to adult learners in topics that are very complex, that we can break them down into common understanding and applications. And we'll see some examples of that as we move through the Fibonacci and some of the price action trading concepts that we cover. I am a certified mental performance coach. That's not to be confused with a psychologist. There is a difference. I'm a baseball guy. The World Series just ended last night. And I'm a big believer in data analytics, not only, from an athletic standpoint, but from a business standpoint. And certainly when it comes to trading is, really charting comes down to you're analyzing data, and we're applying, statistical tools and methods and applying probabilities. And I think, at the end of the day, I think we would all agree and understand that there's no guarantees in trading. It's all about probabilities and defining an edge and whatnot. But really defining an edge, comes down to, really coming up with an educated guess. So why not get the best education that you can in applying your principles, to trading? I've been trading since 1996. Back then, I didn't believe in technical analysis. As a freshly minted MBA student, I was a fundamentalist and believed that everything was really the future value of cash flows and determined by balance sheet. And a lot of that does come into play. But somewhere along the line, I kind of saw the other side, and I saw the math. I think the thing that really turned the corner for me, and I wrote a whole article about this on our site, is the first time I saw a standard deviation on a futures chart. I'm like, I understand futures deviation or standard deviations, but I didn't really understand how it applied to trading. And that was kind of the beginning of a new revelation and a new belief system for me. But at the end of the day, what ChartPros does is we're a comprehensive trader education solutions provider when it comes to price action trading. That is our core foundation. A couple of core philosophies and driving beliefs, behind our organization is, one is if you give a trader a signal, we believe they'll be able to trade for a day. But if you teach a trader price action and risk management, we believe they can trade for a lifetime. We don't sell secrets, costly signals or indicators, but we do provide highly rated training and expert resources to help support your goals and dreams. One of the things we recently started this year is a pay it forward program, where we've had a lot of our traders, and our alumni and our trade room members do very well. And one of the things that I've asked and leaned on them to do is to help pay it forward through a scholarship program of traders helping traders, where they'll pay it forward, from not only from a knowledge and experience and expertise standpoint, but financially. They'll buy courses, for up and coming traders or people that want to learn stuff. And so, in September, we awarded, 75 scholarships that were valued at over $1.5 million. So that program really took off, and it just warms my heart to be able to pay it forward. And that's the whole reason I started the company, is I had some really good mentors along the way that helped me. And if they didn't take, the time and interest to help me advance, then, I wouldn't be the trader that I am. And so I feel compelled and obligated and kind of my, moral duty, if you will, to help others in that same light. And, when we did this program in September for the scholarship program, one of the traders had sent me, they bought some courses for the program, and he ended his email with, hey, go change another life. And, that really stuck with me and resonated. So we're changing lives one trader at a time, as part of our philosophy. Over 6,000 traders have taken one or more of our courses since about 2019 when we got going. I've listed our most popular course, our newest course, our best-selling course, our most advanced, and our highly rated members-only trade room. And our trade room is a little different. And like you, you've probably been a part of one or more different trade rooms in your trading career. And I have too. And I've been in a variety of different ones. And initially they were, signal based, where they would, basically told me what to buy, when to buy, how to buy it, when to sell it. But I didn't really understand what I was doing or why I was doing it. But I knew if I did it right, I could make money, or at least I thought so. But given my background in computer science and just logic oriented and math oriented, I needed to understand the why. So I kind of transitioned me personally from, a signal oriented or an indicator oriented trader to price action, where I could understand, and it was kind of, do it yourself, do it for myself, not have someone do it for me. So in our trade room, the essence of that is, it's one of the easiest trade rooms to join. It's the least time consuming, because what we try to do is make it the most valuable return on investment from your time, so that you can apply the principles that we're teaching and sharing within the room itself. So one of the things that I teach, I preach, and I practice is answer the question of where could price go, when we're looking at trading. And it could be any chart, it could be any time frame. One of the things that we need to be able to answer is where could it go? And that's a whole lot different. We're not an organization that's going to make predictions. We don't call tops, we don't call bottoms, but we do anticipate. And some may think it's just a matter of semantics or words, but it's okay to be in anticipation of particular price levels and then react to that, as opposed to predicting. We don't make predictions. We don't call a top. I don't have to be in at the top, but within a trend or when a particular level to level, I try to capture as much of that particular segment as I can. So these are the 5 price action tools that are native within NinjaTrader and most charting platforms: support and resistance, trend, supply, demand, and change control, and Fibonacci. We're going to be spending our time today talking about Fibonacci, but here's just kind of a sample chart that has all 5 of those tools on it. And for the remainder of this presentation, what we're going to look at and dive deeper into will be the Fibonacci component of this. So who is Fibonacci for? It's for traders looking for precision-oriented price levels in both directions. And it is very precise oriented because it's mathematically driven. And I say both directions because, what we'll learn to see is that Fibonacci is a trending tool, but, markets can trend. And I talked about there being no guarantees in the market. About the only guarantee in the market is the markets will cycle. They'll cycle up and they'll cycle down. Sometimes those cycles are shorter in duration. Sometimes they're longer in duration. And in many cases, what they're forming is a trend. And so we can measure, the trend in the cycles within that trend using the Fibonacci tool. Really, traders with minimal experience, if you're brand new and you showed up, say, hey, I want to learn how to start trading today. Well, Fibonacci isn't going to be the first place that you start. But I suspect that a lot of you have had some trading experience. You've probably heard of Fibonacci. You may know how to put a swing fib on your chart. But what got you here was the 5 other types of Fibonacci that you may or may not have heard of before. And so basically, traders that are interested in learning what many others may not already know. And I'm happy to share it with you today. So, again, what is Fibonacci for? It's used for in trading. It's a trending tool. We use it to identify potential reversal zones, potential extension targets, and each one of these definitions we're going to go through, and you'll see them on charts. Creating bi-directional levels of interest. For us as a trader or an investor, that means that's a particular area that we can develop trade plans from. Identify anticipated confluence areas, creating Fib sequences, and probably most importantly that we use Fibonacci for is trade management for entries, stop losses, scaling out, and full position exits. So let's start. Yeah, that's it. So let's start with some of the basics. I just have something that I kind of hand drew here with some Fibonacci's and some price action. But this is kind of a generic uptrend. We call this a bull Fibonacci. And the wording that we'll use is the anchors for this are called low to high. And so price level A is our low anchor, price level B is our high anchor. The potential reversal zone is going to be between the 50, the 61.8, and the 78.6 levels. And so you see those across on there. The extension target, which is called a target number 1, is the first one is minus 23.6. The second target is the minus 61.8. And the other extension that we'll want to be aware of for now, and again, we'll look at some examples on some real charts, is the 161.8. And just for now, know that is the exact inverse between the price levels A and B. And so this is what it looks like, in an uptrend. To the opposite side of that, looking at a downtrend, we have our anchors. A is the high anchor, B is the low. So this would be called a high to low. You have the same math in the middle as far as the potential reversal zones. You have the same math for the extension target 1, target 2, and you still have the 161.8, which is the exact inverse between A and B. So we have a bull fib retracement and a bear fib retracement. And over the last several weeks, we've seen a lot of both of this across the broader markets. So some critical components before we start looking at charts: anchor placement, anchor placement, anchor placement. Just like they say in real estate, it's all about location, 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 but anchor placements are critical. In here, the retracement levels, the 50, the 61.8, which is often referred to as the golden ratio, the 78.6, those are critical components of the way that we teach Fibonacci. Yes, there are other levels in hyper trending markets. You can use the 23.6 and the 38.2 or advanced fibs to help identify what may be more shallow retracements. The extension levels are the same. The color scheme is arbitrary, but the math levels are not as we move through here. So here's the 6 fib anchor type position types we're going to look at today. The first and foremost that everybody and their brother knows is called the swing fib. But then we're going to dive a little deeper. We'll look at an impulse fib, a validated fib, a sequence fib, something that's called the ABCD fib. And there's a lot of information on the internet about ABCDs. And there's not necessarily one right way or correct way to do that, but there's certainly better ways than others to come up with your ABCD levels. And then advanced fibs, which is kind of a little known technique of using high to high anchors or low to low. So here's kind of the most basic bull swing fib with low to high anchors, where we've got, our low down at A, we've got our high up at B, and it's very important to get the snapping in the position placement of the anchors right on your price levels, because that's going to make a huge difference, for your retracement and your extension levels. Now, this is a weekly chart. This is the S&P 500 through the ticker ES. And here's, if you're looking at this particular bull swing fib, on a weekly chart, price hasn't been down to 40.70, for a while. So you could, this is valid, and it may or may not get to that level. We don't know, but this is something that I would consider an active fib. It could get there. Remember, we're trying to answer the question, where could price go? So sure, price could go there. But that's a long ways away on a weekly time frame. And one of the things that I'll point out too is, this tool works across all time frames and essentially across all charts. Now, the caveat with all charts is the more time and historical information you have, the better. So if there's an equity that you like, and maybe it went public 3 or 4 years ago, to me, that's not quite enough historical information. I like charts that have, decades of information that's out there. So this is the most common, most people know the bull swing fib with a low to high. There's a bear counterpart to this as well, where we've got, the high point is A, low point is B. We've got our targets there in the retracement zone. Now, me personally, when I do the color schemes, you notice I've got my 7. Anytime I'm doing a bear swing, my last level of defense is going to be red, as opposed to this one. And in the bull swing fib, my last level of defense is going to be green. And I do that personally as I begin to have, fib stacking and fib sequencing, just so I don't get confused to myself. So I know that's kind of a common setup, for me. And so, we've got the bull swing, we've got the bear swing, and, we're using anchors, whether it's low to high or high to low. So now we're going to take a look at the next type of Fibonacci, and this is called an impulse fib. This one is a bull, because we're going from low to high. But what I've done, instead of doing that swing from the very low to the very high, I've gone from either the absolute low or an intermediate low to an intermediate high. And I can do that because it started to retrace on this. So this is called, an impulse fib, because I'm taking just part of the run, just part of the trend. And you can see price, going from A up to B, I've got, a retracement that turned around as anticipated between the 50 and 78. Sometimes they'll tick the level exactly, either one of those three. Sometimes it'll kind of turn in the middle. So people send me a question and say, hey, it turned between the 50 and 61. How come, it didn't turn right on it? Well, keep in mind, it's a retracement zone, meaning it can turn anywhere in there. So as price came out of this retracement zone, it actually came back and retested it again before absolutely taking off to the upside. Keep in mind, again, this is a weekly chart. Price went up to target 1, which is the minus 23.6. In fact, to get there, it gapped over it. There was support and resistance off to the left, and it gapped over it, and price kept right on going up to target 2 before it kind of tired out. So you'll see sometimes that you'll get trend fatigue or price fatigue before it kind of turns around. And so if you had gotten long, and again, this is a weekly chart, but if this was a 15-minute or an hourly or a daily, same principles apply. And if you got long in the retracement zone on here, then what you could hold out for potentially and anticipate is for price to reach target 1 and perhaps target 2. and you can manage your trade along the way accordingly. So here's a bear impulse fib with an intermediate high to intermediate low. Now you notice this isn't the absolute high on the chart, but it is the last high. And so from A down to B, again, this is a weekly chart. You can see we got a retracement back up to the retracement zone, and the price came down to target 1. Hasn't yet reached target 2, but know that it could, okay? And I've taken off the bull fibs just, not to confuse us, but later on when we put it all together, you'll see how I do combine these. And so here's a combination. This is called a bull validated fib. And what I mean by that is anytime that we get a retracement and a clean fill, so you see the first A to B on the left, we get a retracement to the 50. We call that a clean fill because we got a retracement within our zone. That allows us to create a new anchor for an impulse run. So I've got my first set of A to B. Now I'm allowed to have a second A to B, okay? And on that second one, this is called, an impulse off of a validated level. So I've validated that retracement. And if you look, what's happened, again, this is a weekly, works across all time zones. Price, came down into the retracement zone. I don't have the subsequent levels after this because this chart is a little bit older. It's probably about 10 days old. But you can see that initially it held at that 50 the first time and spiked right off of it, right to the tick before, kind of easing back off and down and revisiting that retracement zone again. We've actually had a lot of action here recently within this zone. And we'll see how, when I get to some of the lower time frame charts, how it's kind of filled out a little bit more. But this is a validated fib, again, because I have a clean fill off of my first AB, low to high fib there. This is the concept how we teach a bull ABCD fib. This is that 161.8. I put the asterisk there because I mentioned earlier it's the exact inverse between A and B. Now, if you can take draw an imaginary line with your eyes where we're going to go from A to B down to C where I got my retracement, and then up to D, that's that 161. And what that does is that gives us a midway target between target 1 and target 2, where price could go up to. It could decide to turn there. It could decide to stall out there. It could drop off. In this case, we saw there was a little bit of selling here for a week or so before price continued on up to price target 2. So this is just a further dissection of that fib that we saw earlier where we put the ABCD level. And those are important levels because oftentimes we'll see that they align to support and resistance as well. Now I'm going to introduce a concept that we call advanced Fibonacci, and this is a high-to-high anchor. There's a couple of requirements that you have to have, and the most significant requirement is you have to have a significant support and resistance level that price within the trend that price breaks above. So what I've done here is I've identified my significant support and resistance level. You can see the white dashed line. And what I do is I place my the lower part of the high-to-high. I'll take the last sell-off before the break of the support and resistance. I'll say that again. It's the last sell-off. You can see where the anchor A is. It's the last sell-off before price breaks that significant support and resistance. Then I've taken it up to the next high, okay? And that's a little easier to find. There's no other requirements other than you go from high to high. And you can see that the price came down into the retracement zone. Now, when I'm using advanced fibs, the color symbols that I use are orange, so I know they're high to high. Only in this case, when you're doing advanced high to high or low to low that we'll see in the next screen, is you're only going to use the 50 and the 61.8. We turn the other levels off. And so you see in this high to high, we got a nice retracement. Now, the people that were waiting for swing fibs, it looks like the price never came to that level. Well, it's because it didn't. But if you were familiar with the advanced high-to-high Fibonacci technique, it's going to potentially provide you more trade opportunities with more levels of interest. On the back end of this price, you see I've layered in a bear fib or the retracement. So the way I could use this, let's say I were to get long somewhere in that high-to-high retracement zone, then I put fibs in the opposite direction as potential targets. And you can see from the lower retracement level, the 61.8 in the orange high to high, it priced from there, leapt off of there, and it jumped all the way up to that 50% retracement of that bear fib. And so that's how we can begin to identify and carve out level to level type trading using Fibonacci. So this is advanced high to high Fibonacci anchors. In this case, let's see. I've got multiple active fibs going on right here. I've got my high to high that I just showed you. I put that A to B back in there with a retracement zone. But in this case, I let price play out a little bit further, and you can see it went down to target 1. Didn't go quite down to target 2 at the time of this screenshot, but it did go back to that support and resistance. Now, anytime that something like this happens, that high to high orange one is now considered invalidated because it broke down and closed below that retracement zone. So that would come off of our charts. That was no longer valid, but it was super helpful while it was still active. So in this case, we had multiple active fibs at the same time. So that's one thing you have to keep in mind. There's 6 different types, and you can have multiple types that are active at the same time. But again, we're trying to answer that question, where could price go? So here, this is an hourly chart, and this is a little bit more recent. We can see how this played out. I've put in my significant support and resistance level that price broke down below. This was in the last couple of weeks. So I've got my low to low anchors from A down to B. I can see I got a retracement back up between my 50 and 61.8 and my target sitting down below. And one of the things that NinjaTrader allowed me to do was update this next slide, because after I had created this particular fib example, we saw that price ran all the way down to that target. Okay. And so these are very, very powerful concepts that most traders don't know. A lot of traders are going to have the swing fib, or maybe an impulse, or maybe an incorrect fib, but they don't know how to use the advanced levels or all the other ones that are combined in here to put all this together. Let's see, I'll make sure if there's, yeah, so those are the different types that we walk through. There's the 6 different ones. So I want to start with the last couple of slides are, putting it all together with bi-directional fib sequences and stacking. This screenshot's a little bit old, but you can see what's happened. The levels of interest that we had in here in the last week. Price drove down to that impulse fib when price went down to in the 41.22s, the little wick that's there, and just absolutely launched out of that area back to the upside. This was where it turned down there, and this was, I think, from Monday of this week, where again, it's an hourly chart. I had the low to low, and all I did is I just pulled that anchor down. But also off the bottom, I have multiple active fibs. So I have a low to high. There was a 50% retracement. And if you've kept up with the market this week, you would now understand that that low to low has been invalidated because price has closed above it. And what's happened is the reality, if we're not there yet, we're very close to that support and resistance up near 43.40. If we were to update this chart, that's what we would see what the price movement has been up there. So that's the 6 different types. That's different time frames, the weekly, the hourly. That's bi-directional levels of interest. And this is just one of the 5 price action tools, or if you throw in support and resistance, it's 2 of the 5. So when we begin to layer in some of the other tools that we can use, that's where we really see the confluence of different tools within price action trading. So some of the key takeaways here is basically, there's, to me, I call it the magic of the Fibonacci anchors. You saw how some of those were right to the tick. You saw how strongly some of those zones had held. We looked at the swing, the impulse, the validated, the sequence, the ABCD, and the advanced high to high and low to low. It does work across all time frames to fit your trading style. So if you're a swing trader and maybe or an investor, I use the same principles for my retirement funds and maybe have 1 or 2 transactions a year or something like that. But regardless of your style, regardless of your time frame, regardless of what you're trading, anchor placement is critical. I emphasize that early on, but I can't emphasize that enough, that anchor placement is critical. Often the bigger retracements, the bigger the extensions, but not always. So if you have a deep retracement to the 78, probability says you'll have a deeper run into the extension level. When you're in doubt of where to put the anchor, just know it's always okay to use a swing fib. Some of the common mistakes that I see is people will put, their anchors are upside down, and somehow they've adapted it to work for them, and that's okay. But it's not the way that we teach it, because it's not correct. A common mistake is they'll just have the wrong anchor. They think it might be a validated, or they might think it's an impulse, but anchor placement, and there is a methodology. It's almost formula based that you go through to derive the correct anchor in doing that. So there's nothing really arbitrary about where anchors go when it comes to Fibonacci. Within NinjaTrader, there is a merge back adjusted data feature. I thought I would at least create awareness with, that you've got to enable if you're going to be doing weekly charts, because what that does is it accommodates for the futures contract rollover data. And lastly, as I was mentioning, if you layer in some of the other price action tools, such as support and resistance, trend change control zones and supply and demand zones, then you're really becoming an artist with your charts, so to speak. So one of the things that we have for you today is we have a free Fibonacci guide. It's in PDF format. You can download it, and it's going to describe to you. It's about a 30 to 32 page article, if you will. Some call it an ebook, but it will describe in more depth some of the general principles that I just had covered with you today. It'll have the detailed step-by-step instructions for each of the Fibonacci anchor types with chart examples, and it provides a gateway to additional Fibonacci resources and trade recaps. You can get it off of our website, or you can go to FibonacciPros.com. That will take you to the landing page for that particular download. And I think we're going to get that into the chat for you as well too. But lastly, our main website is StockChartPros.com. We'll leave this up here during the Q&A. You can also follow us on social media, Facebook, X, the former Twitter platform, and we're also on YouTube. So I'm going to take a look at the chat and see the questions in here. I know, Patrick, I think you were helping keep monitor of these. Some of these, it looks like I've answered some of these questions along the way. I live in Columbia, South Carolina. Someone asked that. Scroll back up these questions. There we go. Yeah, NinjaTrader will provide the link for this. Thank you. Yes, this is hard work. Fibonacci is not really subjective. I'm not familiar with the TradingView Fib indicators, but if it's an indicator, it's probably not something that I want to use. Small time frame. Yeah, we got to the hourly. Yes, same pattern across all time frames. Yeah, if you use NinjaTrader, it only shows fib levels, not the retracements. You have to configure those. You can do it in NT8, and you can do it in the web platform as well. The handout, yes, that's the free download.
Yeah, I think you got most of them as they were coming in. I figured a lot of what you were talking about was being addressed there.
Yeah, it sounds like it.
Yeah. I don't think you missed anything there.
It was a long question. Let's see.
Cade. Yeah.
Yeah, Fibonacci is a sleep. Yeah, there's a lot that's been written around Fibonacci. There was actually an Italian mathematician who, I call him Mr. Fibonacci because I can't remember his first name. I think he was born and did his work in the 1600s. There's a lot of published work about that, and what you're talking about, the fractal patterns, and that's great. But what I found is it doesn't have the application to trading that it does outside of trading, I think in the way that you may be referring to it. So, wouldn't all swing fibs technically be impulse fibs in a higher time frame? Yes, in theory, but a swing fib is an impulse, but an impulse isn't a swing fib. So if that makes sense. But yes, the different time frames, they're going to present themselves differently. I took the highest to start with. And when I do a chart, I usually start at the monthly level. I work down to the weekly, the daily. I'll go to a 4-hour for intraday. I typically won't go below an hourly, me personally, for trading. We have a chart of the day feature where Fibonacci is used on that. That's free on our website. We also have a Market Insights membership where you can join that for free. We will send you emails with free charts and other types of price action resources as well. Let's see, I think we had some more messages or questions come in. Yeah, Michelle, just to confirm, you draw the fib on the direction of the trend direction. Yes, so if I'm going to draw a swing or an impulse, my A anchor is going to be at the low, and my B anchor is going to be at the top. Yeah, so when you use multiple time frame fib levels, do you use higher time frames to determine the levels, like you say, up to the hour, and then trade the lower time frames? Yeah, you're on to my trading strategy. I will use the higher time frames to develop what we call a market sentiment and a directional assessment, and have a bias. Hey, does it look like the broader markets are going up? Are they going down in the higher time frames? And then I will drill down to the lower time frame. So if I believe price is going to go up to a certain level, then I will try to use Fibonacci and other price action tools to build my way up to that particular level. Is there such thing as a template for fib retracements or extensions? Yeah, it's in the download, and what I covered for you. The levels that I provided are the only levels that we teach. We have found those to be the most effective. I did mention, in the hyper trending markets like we've seen recently, you can use advanced high to high and advanced low to low, or you can use a bull or an impulse swing, or a bull or an impulse fib. And if they have more shallow retracements, you can actually turn on the 23 and the 38. So the template's in the handout, and we covered it. Thank you, Q. If I missed it. So I understand there may be fibs drawn on the 5-minute time frame inside a single. Yeah, you can do that. I don't fib or trade at the 5-minute level, but yes, you could. It does work across all time frames. I've seen them even on the 1-minute. So what course did Vince from Apex do? He talks highly of the course. Yeah, he took the certification course. It's the Price Action Mastery certification course. But the first module of that is our introduction to price action trading. The second module is our Fibonacci. And we do now offer those separately. When Vince took it, it was all just one big certification. So we've kind of broken those down into separate packages now. No tools on Ninja. Yeah, the Fibonacci tool, it's native to NinjaTrader 8. It's native to the web platform as well. But no, I don't use any indicators. I don't use any momentum studies, none of that kind of stuff. Doesn't mean the templates can be downloaded on NinjaTrader. No, you have to create it. Just configure your fib levels to that. You can probably do it in less than 5 minutes. If you have any questions, you can reach out to us and we'll help you with that. Patrick, I'm scrolling back through.
Yeah, I was
don't
going to
think that-
say, it's up to you if we can give it a couple more minutes if you'd like. I
Yeah, if
think
there's
you
more
answered
questions,
everything.
for sure. I just want to be sensitive to not have missed any, because I've
Yeah,
been that person that's asked the question and all the questions got answered except mine one time. So I don't like to do that to people.
that's very kind.
So if I missed your question, retype it. Elliott wave. It's similar to Elliott wave, but it's not Elliott wave. This is just pure Fibonacci. Can I show you a live chart fib retracement? Yeah, I think we're almost out of time, and I'm not right now. I can't pull up the live charts to do that for this session. Can I please review the ABCD fib? Sure. So I've got multiple fibs here. They're both bull. This is an impulse fib where I go from A to B. Okay. My retracement, this anchor is going to be called C. Okay. But the inverse of A to B is D. Okay. And this is probably the most complex component of Fibonacci to understand. When you put on the 161.8 as part of this Fibonacci, and you can see it's drawn, from this wick down to here. It's very light, faint gray, but this is my A to B. It will give you this 161.8. You can see it in the candles here, the level. And basically what it does is it gives you a midway point, not always half, not always a third, but the mathematical midway point between targets 1 and 2. So on a weekly basis, that's a big area to hold for, if you're holding. But let's say price were to come up here, and I put, let's say I've been long and price starts reaching for there. Well, I can put my stop loss under target 1. As price comes up here and it kind of meanders around this D level, it really becomes a support and resistance level. And price decided in that case, it doesn't always decide, but in that case, it did decide to go up to price target number 2. At that point, I could move my target or my stop loss up to the D level. Have I ever tried to develop a fib cluster tool using your own tools? No, I just use what's native to any charting platform out there as far as the Fibonacci tools go. I clicked on the link and the download, but it doesn't appear on my computer. We've got you can contact us off of our website, and we on our support team and our ChartPros success team will be happy to help you figure that download out. Thank you, Diane. Fib circle, Mason. I'm not sure what you mean, fib circle. Well, we've got about 1 minute left, so we probably have time for one more question. Have you ever used fib levels on the time axis? I just use them straight on the charts like I just showed you, regardless of the time frame, whether it's monthly, weekly, daily, hourly. And based on the criteria of what I shared with you today, that's how I apply those. In your trading room, do you need to download anything? No, it's accessed through a Slack channel. You're welcome, Mitch. Thanks for being here. Thank you to everyone staying to the end. Patrick, I appreciate everything that NinjaTrader does for the trading community.
You as well. Thank you, Tom. It was a great webinar. Glad I could be a part of it, honestly. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. One last item for everyone here. We'd like to remind you the information provided in today's webinar is that of ChartPros and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at NinjaTrader Ecosystem.